MMTs, here's that October 1250 call on the S&P. And back over here when we were putting the lows in, this was 5 days ago, these were $9. We had traded the September 1250 call and we made good money on it. But it was going to be the frontline month, because when we could not break below the S&P 500 at 1136, buying $100 above the market was the right thing to do, as we went through the training, the reason why. So if you're buying down here at $9 and then the 5-day move up, you're at $24 on the high. And understanding that when, once again, we went over how these indexes on the S&P 500 were going to hold their value. And today we came right up here to 1216 on the daily S&P, 5 days up. Now notice, at the same time you're having 5 days up in the S&P, that deflated call value for the bull side was a place to be on the market. And we kept harping about it. All of the live analysis is on StockMarketFunding.com. And we've had a 5-day bull rally. But let us not forget that when that S&P had that big gap down in that 5-day, it did not break below 1136 on the S&P. And we did it 1 week ago, Saturday and Sunday, about getting net long up and out of the money and taking that big-ass bull ride on that 1250 call. And that's exactly what's been done. And we've had 5 days up in the S&P for this part of the range with the triple witch today on a 1250 call. Knowing how to buy volatility upside. So what? Everything stinks out in the world. Who cares? What you need to know is when you don't break it, the only thing that matters is that price action. And we came up and made a high today on the S&P. And the intraday high on the S&P from the low of that S&P for the week was 1136. And we traveled on up just as anticipated right to the 1220. We did it here. We also did it here. People were in. This was the backside of the August when I was on, writing reports and we were doing our trade. We took the bull side here. But because the bear side did not want to break, so we had to go bull, and it broke, and we went bear. And now we've had 1, 2, 3 bull runs, and we're in a major bottoming process. 5 days up in the S&P 500, and buying the deflated call over here. It was $8.50. Here's where the breakout was at $9, and the high is $24. And so what? Price action is all that counts. All the bear stuff on TV, that's great, but bear stuff goes when you go down like that, and you're going down like that. We're not. We're leveraging up. And how do you get involved in bull volatility and bear volatility? And how do you get it? And not only that, if you take a look at it, they're trying to get the S&P is coming right back up to the 1228 handle. It hasn't made that reversal. We took that long and we sold short, man. And they took that stuff back down here. They did not break that bottom. And this S&P is going to be range bound. Okay? If we take out the tops, and I've got plenty of analysis for you MMTs, we have many weekends, and we were involved in the short, and we were involved in the upside volatility, and then shorting it when it broke, and then going long when it didn't want to break the bottom, and understanding how to be involved in index options from $9 to $24 on a weekly 5-day run, and understanding that the bear and bull has an agenda, but a SMF MMT knows the real way. 1216 close on the S&P 500, and we're 14 handles from that last reversal top. If we break through there, S&P, could come all the way up here still, 1242. There's a 1240, right below the 1250 handle right in here, and we could continue to go up and test those. We are in a 52-week, very volatile low. It is the month of September, and earnings season's coming in October. And let me tell you something: fund managers are not they're not outperforming the S&P. They're all underwater. The majority of the crowd, net, are not performing. And this is the risk on trade, even with the amount of austerity, and Italy could be downgraded over the weekend and all of that. It doesn't matter. The tape is the tape. It's going long, we long. Buying up and out of the money volatility over here at $9.24 on a 1250 October call was the right thing to do, and it's what we did. Because otherwise you just get set around. We will deal with it more over the weekend. 5 up days in a row, okay? And you had 1, 2, 3 cycles of 5 over here, so you had a counter trend. It's all in the bigger grand scheme of a 52-week low, and this is the time of year that you want to see stocks go higher for Thanksgiving and Christmas and this and that. But I'm sorry, people, the growth isn't there. It's at 1%. All right, all the manipulation in Portugal, Greece, Italy, austerity, this and that, and injecting, and now you have Europe going to be doing the biggest TARP and all of that. Hey, listen, who cares about that? We don't. We care about how this bottom has been acting and how they've been trying to save their life. Because I'm telling you, man, 2011 has not been a good year for the bull and the big fund managers and all of them out there. For some it was. A lot of them held it down. But this is where they buy. And there's mechanicals to it. I can't say it all in the tape, but you MMTs know what I'm talking about because you've been going through each one of the cycles. Shorting the cycle, long the cycle, short, long, 5 days. When you get a 5-day rally, then all of a sudden everyone turns from bear to bull because you have that. Well, I'm sorry. You start dealing with growth in September, moving forward into the October earnings. You take a look at what happened to Netflix. You take a look at what happened to RIM. You take a look at what's going to happen with stocks that have to lower estimates and bring them down. Right now, this is upside volatility. Doesn't matter about fundamentals. Doesn't matter about economics. That doesn't matter yet. What matters is when it fails, we're going to transact a short, and we're going to come up and we're going to hit it, and we'll hit a high, and we are going to come down, and we'll have another great trade on that side. So we got the long debits. Now we're going to go for the short debits. Ha, 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 ha. It'll be time to cash out of that. Right here. $9 to 24 in 5 days. That was the upside 1250 call out of the money. Not so far out of the money now. Remember, we were down at 1135 or 1136 to 1142 when you could have been buying these. Up and out of the money. That's how it's done. Up and out of the money. Daily S&P 500 burn.